High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. MasterTheMarkets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hi traders, in today's live trading session, we're going to be starting to take a look at the live trades, the live potential trades that's occurring across all the currencies, instruments, and commodities. So that's the first thing we'll be looking at, the live trades and potential trades. Also, we got a nice, interesting topic for you, which is very popular, which is when to enter and exit a trade. Okay, as we are entering all of this live, we'll be showing that to you and explaining that to you in detail as well. And then finally, the third thing, we will then take any question and answer session. Okay, this and more in this live trading session. Hi traders, welcome to our live trading workshop. It's still Narpan here, founder of Master the Markets, Elite Traders Conference, and the Traders Open Day. So without further ado, let's go on to the live trades. There's one actually setting up, and I want to go through that with you guys actually. I did see that on the euro dollar, but we'll take a few more look as well. So let me bring up euro dollar over here. So as you know, in our previous videos, we talked about the trend alignment tables, traders. That's what I've done over here. Let me go through that with you guys as well. Also, you know, some of you who are joining in for the first time, if you don't understand any of the concepts or the terminologies, what I'm referring to, what I would suggest is two places what you should be looking at. One is you should be looking at our YouTube channel, right? youtube.com/masterthemarkets. So over there, once you subscribe it, and then those of you are saying that you're not getting the live notifications when we go live, hit the all bell icon. So that's important, small thing that you got to do so that you know when we are going live and you can join us. The other thing is, in terms of the trend alignment tables and everything, if you go under the live section over here, then you can see this one's here, the trend alignment table. So look at that. That will give you a bit more better understanding. Also, the other thing you can take a look at is also this one here, traders. This is what is called the stretch principle. This will give you all a very good understanding of what we're going to go through today before we capture the live trades. The other thing that you can also look at is the 7 steps to ctp.com as well. Okay, 7 steps to ctp.com. That's the one. Once you put your name and email and your number, if you want live trading updates, you get the 7-part video series which I've put over 20 years of research, and that will make you really understand the framework and the edge that we have in the markets. Okay, with that said, that I've got that out of the way, so just so that some of you guys who are not sure what's going on, then you can refer to that. Now let's go on to some trades that are happening at the moment. Now, before the US session, so a couple of things that is happening. So I did see this particular potential trade happening on euro dollar at the moment, right? So what we are really looking at over here. So before we start to think of a bias, so remember most strategies, it really involves two things, isn't it? As Peter Brand also has talked about it. It's one is the bias you form, whether you want to buy it or you want to sell it, short or long. And the other thing is then when do you want to get in, the timing, right? So those are the two things really that comprise for any strategy out there. So based on that, let's now form the bias first, okay? Which direction is this a higher probability towards on euro dollar? So for that, what we do, we got these trend alignment tables, which I've talked about before. What we then do, we align all the trends and the phases together, okay? So over here, when I go on to here, so if you take a look on the daily time frame, As you can see, it's an uptrend phase one at the moment, right? So you can see that really pretty clearly over here. But the reason why you can see it clearly is if you can see all these arrows and dots, what we got, that's the framework that we have, okay? That's the framework that we have, and that what tells us that this high is higher than that, and that is a phase one. And phase one means it's in alignment with the trend. We've talked about this before. You can always check that back on our YouTube channel, okay? So that's on the phase one over here. Now, that's on the daily time frame. So let me just put that back onto here. So that's what I've collated, right? So, and then on the 4 hour, then you got the uptrend phase two. Now, the good thing is on the trading view part, we actually got that all coded actually, right? So it will tell you on the right-hand side, the trend box over here, what trend and what phase it is. In fact, it was designed by one of our clients who just joined us and got really passionate about this, and then he coded it all. And that's the community that we have is really good, which uplifts itself. You know, that's when you know you're going on the right track. So that's on the daily time frame, and then on the 4 hour, what we have over here is actually, let me just go on to here very quickly. And on the 4 hour, what we got is we got a single market compression, what we call it, right? So it's an SMC. It didn't take out its last high. So that's why it is called a compression. Now, all this, what we have coded here and all that, this is what we call the smart money indicator framework, okay? The tops and bottoms quantifications. Now, all of this is explained in the 7 steps to ctp.com, which is what I had mentioned to you guys over here. So definitely take a look at that, because when you combine both of these principles, then they become very powerful on a quantified, sustainable, scalable, reproducible manner. Okay, so coming back to here again, so this is what we call the compression here. So let me go back to here. Let me do that. I think I oversaw that. So SMC, this is a down, SMC down. So let me put that in the box there as well, the trend alignment tables, right? And then after that, on the 1 hour, as you can see over here, that's towards the downtrend at the moment, right? It just took out that low and it's towards the downside. That's what we are having at the moment. And then on the 15-minute, let me bring this up over here. So downtrend phase one is what we got. And then after that, on the 15-minute, when we go to the 15-minute time frame here, and then after that, what we are also having is a downtrend phase two, okay? Because look at this traders. So this, you got lower lows and lower highs. But this high is a potential top at the moment. It hasn't confirmed with our framework dot, okay? Now, the good thing is by waiting for our confirmations, which the quant traders developed in the 1960s, we don't get into situations like that where you're entering it early and then things going against you and all of that, right? We get robust signals, which then also protects and preserves your profit as well. Okay, so we'll wait for this top to confirm if it does confirm or not on the 15-minute time frame. Now, so now coming back to here, so then what we then see, if you see, there is a pattern forming, right? It's a story forming over here. So the daily is an uptrend phase one, okay? So it's going like that towards the upside. But the 4 hour, 1 hour, and the 15-minute, look at that, right? It's all towards the downside. Now, not only that, remember I talked about the stretch principle, yes? So on the stretch principle over here, so if you take a look over here, on the stretch principle, if you take a look, this one here, this is what we call the lower stretch, right? Is taken that out today, okay? So again, bias towards the downside is what we got over here as well, okay? So that's what we got here. And the zero point 0.8 ATR range, as it formed this range for the day, I go back onto my daily time frame. All I'm focusing on is this bar here, this bar that is forming over here today, as it formed its 80% of the ATR range. Now, how do I do that? I take a look at the previous bar, that green bar. I can see over here that the range was 71, wasn't it? So let me just put my cursor there. That was 71. 80% of that is about 56. At the moment, if you take a look on the right hand side, again, that indicator what we've developed was done by our clients. The bar range is only 50. Okay, so it hasn't formed its range yet. Okay, that's what we're saying. There's a high probability of that forming. This is how you should formulate strategies which are based on recurring principles that keep happening again and again. So the ATR range hasn't been formed, and therefore, if you take a look at all the trend alignments and the stretch as well, entry bias is towards the short side. This is how we formulate the bias, okay? This is what you guys got to understand. Now, the other thing then is, after this, what am I really waiting for? I will wait for the confirmation, okay, for the top. I'll come to that in our topic of entry and exit, okay? Now, that being said, now let me go on to the other ones and let's do the tables together. This is the scenario what we're having here. Now, the interesting thing to observe is even though the trends are not matching, but the direction is matching, you see. This is towards the upside. This is towards the upside, bottom to top, even though it's a phase 2 in a downtrend. And then also this one is an uptrend, right? Still matching, but then it's a phase 2. So we wait for it to turn into a phase 1. Okay. And the upper stretch has been taken out as well. Now, so overall, the bias over here, I would say is towards the long. So if you did want to take a position on this, what I would say is wait for the bottom to confirm. Okay. This is what we'll be waiting for, right? That's what we'll be doing over here. Just got to be cautious that 80% ATR range has already been formed already. Okay, so that's that one that I just wanted to show you, even if the trends are not, but we can look at direction. Now, the only reason why we are able to formulate this table, at least on a quantitative basis with conviction in a systematic manner, is because we got our tops and bottoms quantified. That's the first step, and that's the kind of the talk that I did also on the STA as well. That's why I'm telling you guys that without the top and bottom quantification, you cannot get your framework solid. You cannot get your trend and your phases on any time frame. So it's very important, right? And that's the framework that we got. That's the edge that we actually have and our clients have as well. So I highly, highly implore you guys to look into this, because you can also put this onto any strategy as well, because it's just a framework. It's not a strategy, it's a framework, okay? And that's what tells you on any time frame what the trend is, what the phase is. It's very powerful actually once you put that across. Just gives you a lot of clarity, right? And that's what we talk about over here on the 7 steps to CTP. So if you look over here on the 7 steps to CTP.com, then you can put your um, name and email and then number if you want to, and then you can get the videos. That's what I'm telling you, really, really powerful because it's very quantitative. Um, right, okay, so now let's go on to this part here. So the guys, I just got a message. Some of you guys are saying, can you do the table part again? Yep, no problems. We'll do that together again. On the dollar Swiss, maybe we can do one more instrument as well, but it's okay. On the dollar Swiss, what I will tell you again is on the downtrend phase 1, right? The daily, right? This is a trend alignment table, so I got all the different time frames here. So on the daily time frame on the dollar Swiss, what we got over here is downtrend phase 1, right? So if you were to, sometimes if you're not clear, because we got the top and bottom quantified, we can draw a line diagram, you see. When you draw the line diagram, it becomes more clearer. Then that's a downtrend phase 1, okay? So that's what we got over there. And then over here, then we got on the 4 hour, then you can see the same thing, right? So when you map it all out over here, as I've just drew it for you guys, then it's downtrend phase 2, okay? So this is what I was putting it all on the table just now. And then on the 1 hour as well, then that is a 1 hour downtrend phase 2 as well, okay? So on the 1 hour, if you take a look again, hasn't taken out that high, downtrend phase 2. And then finally on the 15-minute, when I take a look as well, but then that is an uptrend phase 2. So basically, if you take a look on here, let me do it here so that you guys can see it more clearly. What you can see over here is that over here, this is a downtrend phase 2, right? But on the 15-minute, this particular part, right, there's a big retracement here. On the smaller time frames, it's showing you as a uptrend phase 2, okay? This is why it's very important to get your trends, alignments, and phases, because traders, if you just blindly just went on this long without taking a look at the higher time frames, then you just got to be careful when the downtrend takes over on the higher time frames and becomes a phase 1. That's when people, when they enter long on lower time frames, it doesn't work and it doesn't go up more further, okay? So this is the things that you just got to be aware of. This is why we put these trend alignment tables. They're very powerful. And you can use it across any strategy. And then we took a look at the stretch and all of that, right? So let's do one more together as well. I just want to show you guys as well. Let me just take a look on the euro dollar, what's happening. It's still not confirming. You see, this is what I mean, right? So waiting for the confirmations with patience also preserves your profit and not taking any impulse trades, all right? So this is all very important for us. Remember that you can apply these principles even earlier on as well. I mean, there are so many opportunities here, but since we are in real time right now, I will take a look at only trades that are happening at the moment towards the US Open, okay? Right, so then we got the 15-minute here. That's all fine. So I will go on to one more instrument. Let's take a look at the DAX. Do we have any setup here? 0.8 times 323. That's about 240, isn't it? Yeah, that's already done its range for today. But if you guys did want to take a look at that, what you can do, because I think this one will be very straightforward. This will be an uptrend across all time frames. So stretch principle, probably not that strategy right now. So this is uptrend phase 1 as well. So let me just quickly just type all that into here on the DAX, right? Uptrend phase 1 on the 1 hour should be uptrend phase 1 as well. Let me take a look at that. Yeah, that's uptrend phase 1, 15-minute. What's it doing? Might be an uptrend phase 2. Yeah, it just confirmed its top over there. So again, this is a good one here. Uptrend phase 2. And then the 1 hour stretch, isn't it? The 1 hour stretch is also towards the upside, right? And 0.8 ATR range, yes, on the upside as well. This one is pretty clear. You see, look at that, right? Some instruments, that's why I say if some instruments are not that clear, take a look at other ones. Look at this, it's very clear, isn't it? Very obvious, all towards the upside. Now, how can you then take some positions and all of that? So now let me come on to the topic for today then, right? Enter, how do you enter and exit a trade? Now, entry and exit on a trade is based on your strategy construction, okay? On your strategy rules. It's a big topic. This is what we cover a lot more in detail in our Traders Basecamp package programs and all that. If you guys want to understand that, you can always email us at clientservice@masterthemarkets.net. Now, in strategy construction, the sad part is not many people really talk about strategy construction. Online, I've seen that mainly they just talk about here's a strategy, go and do it and see if it works. But not every strategy, not every, like I give the analogy of the cars, not every car will fit your personality, isn't it? You might have a preference towards certain cars, maybe for the design, for the speed, whatever it might be. So the same thing with strategy construction. Your entry and exit is based on your how your strategy rules have been defined. And the strategy rules objective is that it's got an edge over the law of numbers, over the law of trades that you're going to take, that it can then eventually give you a net profitable strategy. That's the whole idea. So based on entry and exit, as I said, as we have taken a look in this particular thing, form a bias first. That's what you got to do. Now, the bias over here, what we've done is based on purely price action, okay? Based purely on price action and trend first. We are aligning all the trends, which makes sense as well, because that's the nature of how markets move in cycles, okay? So we're going into the nature of the market movement. Now, after that, after you've formed your bias, okay, on your direction in your strategy, sometimes your bias can even be based on moving averages. It doesn't matter. Whatever your bias is, the rules must be set out, okay, towards your entry. Now the entry, I would say split it up in two parts. One is setup and the other is confirmation. Now the setup, as I said, the setup I'm looking for is first the trend alignment tables. I found my buyers, but that doesn't mean I enter yet. Then on this particular strategy rules that we got, let's say on the 15-minute over here on the euro dollar, my confirmation, when will I get into the trade, is when this top confirms and top arrow and a dot happens, okay? That's when I will get into the trade, okay? So that's my confirmation. So coming back into that, as I said, for my setup is the trend alignment tables, and then for the confirmation is for the top or the bottom confirmation based on my bias. In this example, it will be a top confirmation. So I need to wait for the top arrow to come and then the dot to come on the bar as well. Now, further confirmation, what I will also do is also I will take a look at volume as well. So I'll go on to here. I've got the volume all set up over here. And that's done by Trade Guider and the team, Gavin Holmes and his team as well over here. What I will do is, as I'm looking to get my confirmation towards the top, I'll take a look at the VSA light dots as well based on volume structure and moving averages as well. And I'll also take a look at some volume over here, looking at seeing that as the volume supporting towards the down move or not. At the moment, it's only crossed the first average. It'll be really good if we can get some spikes towards the third average over here. Okay, this is what we had over here, right over this potential buying over here on this particular point over here towards we took on a long side. Now, so I will get all that confirmation before I go in, okay? So that's on the entry side. So you have to write your own rules as well. But I would say think in terms of that setup and then confirmation. Then finally exit. What we usually do here at Master the Markets is we look at some recurring principles for exit. One recurring principle, I can look for range, right? For the range to form. And then that could be one exit, right? Another one, very simple one, I can take a look, I can measure my swing distances. Now, this is another powerful thing with quantifying your tops and bottoms. All this we talk about at the 7 steps to CTP. What are we doing actually here? On this 15-minute, what it's doing is it's measuring its swing distance. How much did it travel? This one did 17 pips, right? This one only did 2, this one only did 35, right? This one here, all this. And then once we got all of that, then we put that all onto a table. So let me bring up the table. This is what we call the OE stats over here. Now let me put that onto here. Now then you can see that over here, I can get my OE stats table. So over here, it's telling me that whenever the confirmation bar then happens, 56% of the time, right? Or for phase ones, if you're taking all in terms of trend alignment, it will definitely move a bit more. So usually add another 10%. We are designing the filters towards this, so very soon it'll be released. So 66, 70% of the time it will move at least 5 pips from the time it confirms. That can be a very high reliable strategy that you can do. Then you can also take a look at the 20% number as well, okay? So whenever the time confirms, then I can take from the close bar over here, I can take 15 pips as well. So this one here, this movement here did hit it as part of that 20% move, okay, earlier on today. This is how you can then use your exits based on probabilities, right? This is what we are really looking for. That's how trading should be, based on probabilities, right? So in summary, so if you take a look, so on entry, as I said, have a setup, have a confirmation. In the setup, have a bias, right? And the confirmation, then over here, we're taking on the swing confirmations. You can have your own confirmations as well, when maybe a support resistance lines gets taken out. So all this you can do, okay? And you can apply this framework on any strategy that you're doing as well, because at the moment, at the end of the day, it's part of cycle movement, okay? The framework can apply to anything. Then the final thing then is the exit, right? For exit, I would rather say that decide on something that has got a recurring principle, something that keeps happening in the market again and again. One part is an ATR range, right? And the other one is a swing distance, okay? A swing distance range. That's the two things that you can look at, which you can take a look at and leverage from these OE tables. As I mentioned before as well, that you can definitely go through all those concepts in detail in 7steps.ctp.com. Once you put your details in there, then you get the videos. I highly recommend you guys 15, 20 years of research. For also help from the quant traders as well, who trade for institutions, Morgan Stanley and all of that. We got this knowledge, okay? So highly recommend you guys to check that out. Now coming back into here, so on the euro dollar, we're not getting that confirmation as of now. I will take a look at other ones. Let's see on DAX at the moment, and then we can wait and see how they all turn out. This one again, we can wait and see if we do get a confirmation. I know the ATR range has been formed, but if it does go much further, then we can wait for the bottom confirmation, and then we can take it further up. Okay. Now I'll do one last one. Let me see on gold. Do we have any trades on gold? Maybe gold might do something today. And then we can, I think we did miss that one, didn't we? Okay, never mind. Let's take a look on this one here. Just as then you guys can understand and you can use it for the rest of the week as well. So this one here, I got an uptrend phase one. But over here, I can definitely see it's very low OE. As you can see over here, it's very overextended, isn't it? Let me just show you that. This is the power when you got a framework. This is when you get the clarity. You see, look at this, right? So you see uptrend phase one, so overextended, isn't it, traders, right? So that's what you got there. And then after that, then you got the 4 hour. On the 4 hour, I already have a downtrend phase one here, right? So let me just do that. And then on the 1 hour, let me take a look at that. Did we have? Yes, that was a downtrend phase one over here. The downtrend phase one. And then on the 15-minute, let me just check that. It's very straightforward. It's all aligning, isn't it? We did have a signal here. You see, I didn't check this before, but there we go, right? We did have a signal here. When it took out that, was a downtrend phase one. This was when? This was at no, this was much earlier than before we had this session here, right? So this was about 12 o'clock. We had that. So that one here was a downtrend. At the moment, it's still a downtrend phase one. Let's see if we can get any other opportunities. Downtrend phase one, 1 hour stretch. Yes, it's taken out to both the sides, isn't it? Let me just show you guys that on the 1 hour. Yeah, it's taken out it to the both side. That was a false breakout, really. Taken out to the upside, then to the lower side as well. So I would just say it's taken out to both sides over here. So both. Then again, one ATR range. This is a good one. Then we can finish off of this. Now we've gone a little bit over time. Over here, bar range $65, isn't it? This one here, 40, 32. Yes, it's done its bar range for today. If you look, it's $39. The ATR is 40, 0.8, 32. It has done its range of the 80%. It might go to its 1 ATR today, so there might be some move left. I would just see a yes to the downside, isn't it? Yes to the downside, this one. Okay. And this one, the latest one is on the low, right? I'll just do that as well. Latest one to the low. Entry bias is towards the short, I would say. Okay, this is what we got here. Great. Now, on the gold, so what we can do then, later on part of the day, what we do is, if you go back to the 15-minute, if you do want to take some positions on this towards the short side, then what we can then do is, we will wait for this to retrace. Okay, we wait for a bottom to confirm, and then after that, top to confirm. And on top of that, I will take a look at volume as well. So if I go back to here, for my additional confirmation from Trade Guider team, from the VSA Pro that they got, which you can see at the bottom. So let me go over here. Let me just quickly just double check that. We can see that at least that's a gray towards the downside here, and there's a no demand signal as well. And then here, then we can see there's a bit of volume spikes happening. After that, we had the big move over here as well. So it's all confirming, but towards the 15-minute, I just need a bit of retracement before I take it towards the downside again. Now, what is uh, the OE number on this one? So let's take a look on that. Where can I take a look at in terms of my stats on where to get out in terms of swing distances? So I've got it all over here. So my 53% is a 1 ATR number, right? So if I take a look over here, my ATR number here is about $5.45. So whenever I get the confirmation, so I will do it. So for example here, if I did get a confirmation, I want to take that, that would be $5.45, okay? That's what we will be taking a look at, which will get there 60% of the time. This is one way that we can do, but remember, different strategies will have different exit points, okay? Last part, I'll just take a look at euro dollar, what's happening. Yeah, you see, this is the best part about waiting for our top confirmation. You see, if you entered it quite too early, what would have happened? Or now you'll be sitting through this and highly probably your stop might get out if you did put it for the high. This is the best part of the framework because there's a lot of testing has gone through this to get the bottom and top confirmation. But we'll keep our eyes on this, on the euro dollar, and also on gold as well, and we'll keep you guys updated on how that goes, okay? Right, so now as a quick recap, so what did we go through so far then, traders? So let me just bring that down. So what did we go through so far? So we went through some live trades and potential trades coming up, right? And the main things what we're really looking for is euro dollar on the short side and also gold on the short side as well. And then also DAX on the long side. So we will keep an eye out on all of this. And then towards the second thing, we also covered a topic for today as well, where entry and exit, where we said on the entry, form a bias. And one way that you can do it through the trend alignment tables. And after you've done that based on the setup, then look for confirmations to enter. And then after that exits, you look at recurring principles. And two types of examples we gave you was one was range and the other one was the swing distance on the OE, okay? And then the third thing then also then, which is the question and answer session, we did answer something. I mean, you guys, one of you guys said about the muted stuff. But the other things, let me just look through the questions, what the team, I think one usual question, yes, I think we're getting that as well, is how do you actually understand this framework? I mean, the framework, you see, traders is not really doing much, but it's so critical though, which is all it's doing is quantified what a top and a bottom is. So the dots, what you're getting over here, right, is when the bottom gets confirmed by the formulas that gets fulfilled, okay? That's what we are doing over here. And you look at that. After that, look at the move and look at the swing that you actually took on from there. We did take this on one of the Elite Trading Room strategies, right? We got about a good 5.51%. But it's not about making the profits, it's about understanding what you're doing. And we're understanding the swing distance, and we have put that in a systematic manner on how much each swing moves. We're getting the data, and that's what's giving us the confidence going forward, okay? So that's what the framework is doing. And the framework also gives you two more stats as well, where to put your stop losses and how long will it also take to get to your target. That's what the framework is doing. But the first part of the framework is to understand what the tops and bottoms, quantify your tops and bottoms. This is the exact talk that I gave also on the Society of Technical Analysis, right, back last year. And then after that, what they did is they invited me to come and lecture for their diploma students. So over here, you can see over here, right? So over here, when you take a look at the online courses over here, on the Technicals to Trading Systems course over here, if I click on that one there, you will see I'll be lecturing for the students over there. Okay, so you can see over here on the course objectives and the people who are going to be lecturing, you can see that in terms of that, meet your lecturers, you see over here, and you can see that I'll be lecturing for them in April. So it's very, very solid, good quality stuff that we have over here, which will help you approach the market in a very systematic, probabilistic manner, which will help you build strategies that are sustainable, scalable, and reproducible. Okay, so highly encourage you guys. I mean, if you want to understand this, definitely I would say go for it, understand it, and apply it to any of your strategies that you got. 7starctp.com, and then go through the videos at your own free time. They're only about 10 to 15 minutes, but it really help and improve your trading quite a lot. Okay, right, traders, I guess I've gone above quite a lot of time today, but I guess it was well worth it. Let me just take a look. Yeah, so we're still waiting on that one, isn't it? Great stuff. Okay, so I guess that will be a wrap for today. I think that's enough. I think we covered quite a bit. Of course, go and revisit the knowledge there. Go to our YouTube channel as well, youtube.com/masterthemarkets. Go through the stuff that I've told you guys as well. Okay, and I'll see if I get some time. I'll put it onto the TradingView channel, Master the Markets 2010, on these trades that are happening. Okay. Right. Other than that, I would say that will be a wrap. Thank you for coming today. Such a pleasure. And as we say always, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.